Welcome to the Hindi Daily.
Today we're looking at some really foundational shifts. We're talking
Yeah.
about the courts, the economy,
Yeah,
even global politics. It's quite a lineup.
it is. And we're going to dive straight into the deep end, starting with the editorial section. The first article is called The Judicial Erosion of Electoral Integrity and Citizenship Rights.
Right. And this goes way beyond just voting. It gets to the heart of the legal machinery behind who even gets to be a citizen.
So what's the trigger for this?
The focal point is something called the Special Intents of Revision, or SIR, of the electoral rolls.
Sir.
And to really grasp how serious this is, you have to picture the scene at the Supreme Court in early February 2026.
Okay.
You had the West Bengal Chief Minister, Mamata Banerjee, appearing in person.
Wow. That's a rare thing. A sitting chief minister doesn't just show up unless the stakes are incredibly high.
Precisely. She was there to argue that this whole SARA process was, filled with procedural flaws, that it was really hurting the residents of her state.
So she's sounding the alarm bell, basically.
She is. And the Supreme Court, well, they did issue some directions on February 9th to sort of mitigate the immediate problem.
Okay, so some relief.
Some. But they also included a statement that has just left legal experts scratching their heads.
Yeah.
The court said, and I'm quoting here, no impediment to the SARA would be allowed.
No impediment. That sounds incredibly final. It's like they're saying this train is leaving the station no matter what.
That's exactly how it sounds. And that's where the core of the conflict is. The court is effectively saying the process must continue.
Right.
But here's the kicker. There are petitions already sitting right there in that same court's docket,
Okay.
filed way back in July from Bihar, that challenge whether this SARA process is even constitutional in the first place.
Wait, hold on. Let me get this straight. They haven't decided if the process is legal.
Nope.
But they're ordering that nothing can get in its way.
That is the perfect analogy.
Yeah.
And it brings us to this legal concept. It's called fait accompli.
Right, an accomplished fact, something that's already done, so by the time you judge it, it's too late to reverse.
Exactly. Just look at Bihar. Their election was back in November 2025. The SR is done there. People voted.
Over.
It's over. So even if the court rules tomorrow that the whole SR thing was unconstitutional, what can they do?
You can't unelect a government.
You can't. So the court is acting less like a constitutional guardian, checking if the rules are even valid.
And more like a project manager.
A project manager, just tweaking the implementation while the project is already live and running.
It really feels like the Aadhaar case all over again.
Well, it does, doesn't it?
That was challenged back in 2012, but the judgment only came in 2018. By then, Aadhaar was everywhere, linked to everything. It was just too big to fail.
And that's the fear here,
Yeah.
that this act now, judge later approach is becoming normalized. But for you, the listener, the real impact is what the article calls the inversion of rights.
Okay, break that down. What does that mean in practice?
Well, usually under the law, the Election Commission needs a specific reason to take your name off the voter list. They have to suspect you as an individual.
Right. There has to be a cause.
But the SIR, it's different. It acts more like a dragnet. It starts with the assumption that there are non-citizens hiding in the voter list.
And then it forces everyone to prove they belong.
It flips the burden of proof entirely. Instead of the state proving you shouldn't vote, you have to prove that you can.
And we're already seeing consequences of this.
We are. There are reports of something called Form 7 being misused.
What's Form 7?
It's a form that lets any citizen object to another citizen's inclusion on the list. So you can get arbitrary deletions, neighbors objecting to neighbors.
Yeah.
And it hits the most vulnerable people the hardest.
Of course. The poor, marginalized communities,
Mm-hmm.
the people who might not have a perfect paper trail going back decades.
Exactly. So when the court treats this as just some administrative tweak, it's missing the point. This is a fundamental change in the relationship between the citizen and the state.
That is a pretty sobering place to start. So let's pivot from how the state counts its voters to how it counts our cost of living.
A very different topic, but just as important.
This is Article 2, Modernizing the Mirror, India's Consumer Price Index Evolution.
And this is really long overdue. The government is finally updating the base year for the CPI.
From 2012 all the way to 2024.
That's right. And I like that metaphor in the headline, the quiet mirror.
Me too. It's supposed to reflect our daily lives, right? The cost of food, rent, fuel. But if the mirror's from 2012, that reflection is going to be pretty distorted by now.
Incredibly outdated. I mean, just Think about your own life in 2012 versus today.
Totally different.
The economy has changed so much. We've had massive urbanization. The service sector has exploded. Digital platforms are everywhere. The old basket of goods and services, it doesn't match what Indians are actually spending their money on.
So the main fix in the new 2024 series is updating that basket, changing the weightage of items.
That's the core of it, yes. It uses the Household Consumption Expenditure Survey from 2023-24, so it's much more current.
So things that take up a bigger chunk of our budgets now, like data plans or different kinds of food, they'll have a bigger impact on the inflation number.
Exactly. And that matters for everyone because the CPI influences everything from salary hikes to Social Security and, crucially, the RBI's interest rate decisions.
But the part of the article that really jumped out at me was how they're collecting the data now. They're calling it computer-assisted price collection.
This is a huge leap forward for data quality.
It's not just people with clipboards anymore.
Not at all. In the past, that manual collection was always prone to error. Now, for things like telecom services, airfares, all sorts of online services, they're scraping the prices directly from the web.
Which just makes so much sense. Why send someone to ask a travel agent for a flight price when you can just pull it from the airline's website in real time?
Exactly. And for other things like rail fares or items from the public distribution system, they're plugging directly into official government data portals.
So it takes the human error out of it.
It reduces it significantly. It brings India more in line with international best practices while still keeping that local specificity we need. The takeaway is that better data should, in theory, lead to better, more responsive monetary policy.
Okay, so from how we spend money to how the government collects it, let's move over to the opinion section. Article 3 is the evolution and efficiency of India's direct tax system.
This one is a deep dive into tax data, looking at the period from assessment year 2013-14 all the way up to 2024-25.
And the headline numbers, they're pretty explosive.
They really are. The taxpayer base has more than doubled.
It went from 5.26 crore to 12.13 crore. That's in just 11 years. A compound annual growth rate of almost 8%.
And it's really important to see this not as a one-time blip, but as a genuine structural shift in the economy.
What's driving it? Is it companies or individuals?
That's the fascinating part. It's individuals. The number of individual taxpayers has been growing at about 8%. The corporate side is much slower, a steadier 5%.
So what does that tell us? Businesses are formalizing, but at a more measured pace.
Right, whereas regular people are entering the tax net at a full-on sprint. But the stat that really blew my mind was the cost of collection.
This is the ultimate efficiency metric, isn't it? How much it costs the government to collect the tax.
It is. And back in the financial year 2001, for every 100 rupees the government collected, it spent 1 rupee and 36 paise just on the collection process.
Okay. And today?
Today, that cost has plummeted to just 0.41 rupees, 41 paise.
Wow. That's wildly efficient. It's less than 0.5%. How on earth do they manage that?
In a word, technology. It's actually a very similar story to the CPI update we were just talking about.
Digital filing, that sort of thing.
Digital filing, pre-filled returns where the system does half the work for you, and the big one, faceless assessment.
Right, where the tax officer assessing your return has no idea who you are, and you have no idea who they are.
Precisely. It removes friction. It reduces the potential for corruption or harassment. What it means is the tax department is doing way more work.
With proportionally less money and fewer resources.
You've got it.
And what's the big picture takeaway from that? What does it mean for the economy as a whole?
It signals a real structural strengthening of our public finances.
Yeah.
When your government's revenue comes from a broad base of 12 crore people instead of a tiny elite.
The system is more resilient.
Much more. It's less vulnerable to a shock in any one particular sector of the economy.
So the government is getting much more efficient at collecting money. But then, how efficient is it at spending that money on the future?
Very good question.
Which brings us to the science section and Article 4, India's science budget. Ambitious missions facing fragile realities.
Yes, this is a look at the union budget for 2026-27. And on the surface, on paper, it looks great.
It has all the right buzzwords. Biopharma, semiconductors, carbon capture.
All the big ambitious stuff. But the article calls it a fragile reality.
So why the skepticism?
It comes down to the gap, which is often quite large, between the budget estimate, what the government says it will spend, and the actuals, what it actually ends up spending.
There's a history here.
A long history. For instance, the Department of Science and Technology recently saw its budget estimate of around 8,000 crore rupees get cut down to actual spending of only about 4,000 crore.
That's a 50% cut. That's not a trim, that's an amputation.
It's huge.
Yeah.
But this year, there's a shiny new object to talk about. The Biopharma Eshekti mission.
Right. 10,000 crores over 5 years.
Yes. Focused on non-communicable diseases and biosimilars. And it's welcome, of course. But experts like L.S. Shashidhara are pointing out a potential problem.
Which is?
The fear is that it'll be run by the Department of Pharmaceuticals.
Yeah.
And their natural priority is downstream manufacturing, actually making the pills.
As opposed to upstream discovery, inventing the new molecules in the first place.
You've got it. So we risk becoming a great factory, but not a great laboratory.
That's a really important distinction.
And it connects to this brilliant critique in the article from C.P. Rajendran, who talks about the globally fashionable script.
I love that phrase. It sounds like we're just chasing trends.
That's his point. The budget loves these big, flashy missions, space, AI, semiconductors. But it tends to starve the basic, fundamental research that makes those missions possible in the long run.
Do we have specific examples of that?
We do. Support for the Indian Institute of Astrophysics has stagnated, and overall R&D expenditure as a percentage of GDP is stuck at around 0.64%.
Which, when you factor in inflation, is effectively a cut.
It is. And there's another great point from the Punjab University Vice Chancellor.
About where the students actually are.
Exactly. She argues against building these brand new, shiny enclaves of excellence while bypassing the legacy state universities, because that's where 80% of the students in the country are.
So if you want a truly scientific nation, you can't just fund a few elite islands. You have to raise the tide for everyone.
That's the argument. You have to lift the base.
A crucial point. Now, let's stick with the theme of money, but shift to how it's shared between the center and the states. We're in the text and context section, Article 5.
The 16th Finance Commission and the evolution of fiscal devolution.
So this is all about the new report for 2026 to 2031, headed by Dr. Arvind Panagarya. And the core conflict here seems to be the fight over the size of the divisible pool of taxes.
It is. The states were pushing for more. They wanted 50% of central taxes.
And they really wanted things like cess and surcharge to be included in that pot.
Yes, because right now the center keeps 100% of that. But the Finance Commission's verdict was a clear no.
So vertical devolution stays at 41%.
It does. The rationale given is that the center needs its own funds for national priorities: defense, major infrastructure, and unforeseen emergencies.
And the center also argues that it already spends a lot of money in the states through centrally sponsored schemes.
That's part of their argument, yes.
Okay, so the total size of the pie for the states didn't change. But how they slice that pie up amongst themselves, the horizontal devolution, that did change.
Yes, and this is where it gets really interesting. We're seeing a clear shift in philosophy from equity towards efficiency.
What does that mean?
Well, previous commissions gave a lot of weight to equity criteria, things like population or the income gap between states, so poorer states got more.
Right, to help them catch up.
This commission introduced a brand new criterion: a state's contribution to the national GDP.
So if your state's economy is a major driver of national growth, you get a bigger piece of the pie as a reward.
That's the idea. It's a win for the more industrialized states, mainly in the South and West. They see a marginal increase.
And the North and Central states.
They see a marginal decrease. The Commission calls it a directional change. It's not a massive shock to the system, but it clearly signals a new priority on rewarding economic performance.
Very interesting. Okay, let's look across the border now. Article 6, the second liberation, Bangladesh's path to the polls.
This is very timely, with the general elections in Bangladesh happening on February 12th.
And they're framing this as a second liberation. Huge electorate, 12.7 crore voters. But the political landscape looks completely different this time.
It's unrecognizable. The Awami League, Sheikh Hasina's party, is essentially out of the picture. They're either banned or boycotting, and thousands of their supporters are facing legal cases.
So who is in the running?
The main contest is between the BNP, the Bangladesh Nationalist Party, and an alliance that includes Jamaat-e-Islami.
But the truly unique thing about this election is the referendum that's happening alongside it.
Yes, this is the key part. Voters aren't just choosing a party, they're also voting on something called the July Charter.
And what's in that charter?
It's a whole package of systemic reforms proposed by the interim government. Things like creating independent constitutional bodies, a two-chamber legislature, and crucially, limits on one-party rule.
So if you vote yes, you're binding the new parliament.
You're binding them to pass all these reforms into law within 180 days of taking office.
That's a powerful tool. It's an attempt to hardwire the changes.
It is. It's trying to institutionalize the revolution that happened in 2024. And as for India's role, well, we've been invited as observers, but the relationship has definitely cooled. We're watching very, very carefully.
From South Asia, we now go to South America. Article 7 is a historical piece, Open Veins of Venezuela, 5 Centuries of Imperial Pillage.
And this article does a great job of framing Venezuela's current crises not as a recent event, but as a footnote in a 500-year-long story.
It contrasts two views of history, right? The civilizing mission idea versus the pillage view from Eduardo Galeano.
Yes, from his famous book, Open Veins of Latin America. And Galeano's argument is that Latin America's underdevelopment isn't an accident.
It's a direct result of Western development.
A structural byproduct. The argument is that the resources and the labor were pillaged from the continent, specifically to fuel the rise of capitalism elsewhere.
And the article connects this long history to the more recent Chavez era.
It does. It frames the Bolivarian project under Hugo Chavez as a serious attempt to finally break that cycle of dependency.
And he had some successes.
He did. A new constitution, more participatory democracy, social programs for women and indigenous people, land reform. There were real gains.
But ultimately it failed. What went wrong?
Two things, really. Internally, he never managed to break the country's deep, deep dependence on oil revenue.
And externally.
Externally, he faced a unipolar world dominated by the U.S. The article makes a really sharp comparison to Cuba, which had the Soviet Union as a backer during the Cold War. Chavez had no such support system.
So that external siege led to internal problems.
It led to an internal turn towards authoritarianism, yes.
Let's move to the business section now. A very different kind of volatility in Article 8, the software sell-off.
The financial markets are definitely in a messy spot. The S&P Software Index just had its worst 3-month run since 2002.
And the result is that deal-making mergers, acquisitions, IPOs, it's all frozen.
It's completely stalled. And it's because of what the market calls the valuation gap.
Okay, explain that.
Well, the buyers look at the stock prices crashing, and they get scared of overpaying for a company that might fall further.
Right.
But the sellers look at where their stock was just a few months ago at its peak, and they refuse to sell at what they see as the bottom of the market.
So nobody can agree on a price.
Nobody can. But the article suggests it's more than just normal market volatility. There's a deeper anxiety at play.
And that's AI anxiety.
That's it. Investors are looking at the massive wave of generative AI, and they just don't know how it's going to reshape business models. They can't tell who the winners and losers will be, so the safest bet is to do nothing.
We're seeing real-world examples of this, like the company Brex.
Yes. Its valuation dropped from $12 billion to being sold for just over $5 billion. And OneStream was taken private at barely above its IPO price. The takeaway is to expect more deals to fall apart or get repriced in the near future.
Okay, for our final article, let's stay in the world of finance, but look at a very different strategy. Article 9 is the art of the slow bull.
And this is all about China's approach to its stock market.
The art of the slow bull. I like that. They want growth.
But without the froth, they want a steady, sustainable rally, not a wild, speculative bubble.
So the regulator, the CSRC, is cracking down on speculators and pump-and-dump schemes.
They are. But here's the really counterintuitive move. The national team.
These are the big state-backed investment funds.
Right. They were actually selling stocks into the rally.
They're selling. Why would they do that if they want the market to go up?
To cool it down, to tap the brakes. They want to prevent another massive boom and bust cycle like they've had in the past. The goal is a slow, steady, sustainable rise that builds real investor confidence.
And this isn't just about the stock market, is it? There's a bigger goal here.
The bigger goal is the yuan. Xi Jinping has made it clear he wants the yuan to achieve global reserve currency status.
And you can't have that if your asset markets are a casino.
You absolutely cannot. You need a stable, reliable market to attract long-term global capital. The strategy seems to be, as one analyst put it, if you put up 3 years of good, steady performance, the money will flow in. It's a fundamental shift away from devaluing the currency for trade towards appreciating the currency for investment, a real long game.
Thank you for listening. If you want to provide suggestions, please contact on the Twitter handle given in the episode description. As always, we are eager to hear what our listeners want to be informed about. We wish you a great day.